Below is a detailed article summarizing where the real estate market stands as of late 2025 and what the future may hold. I structured it into current market situation, key forces at work, and future predictions, so you can see how the pieces fit together and what to watch. Current market situation global overview. The global real estate market is showing tentative signs of improvement after a period of stress and uncertainty. For example, according to PwC and the Urban Land Institute, markets in 2025 are showing a return to form in many regions, with inflation easing, interest rates stabilizing, and transaction volumes gradually picking up. JLL plus 3 PwC plus 3 PwC plus 3. A report by Nuveen found that global private real estate values have ticked up for 5 consecutive quarters after a 2-year reset. Nuveen. According to the International Monetary Fund, IMF, global economic growth is projected to slow somewhat, from 3.3% in 2024 to 3.2% in 2025, which means the real estate market remains subject to broader macro pressure. IMF. Residential housing markets. In the residential segment, some of the key patterns. In the U.S., J.P. Morgan projects home price growth of around 3% or less in 2025, given the higher-for-longer mortgage rate environment. J.P. Morgan Chase listings are increasing. Data from House Canary show that in June 2025 active listings in the U.S. were up 23% year-on-year, and inventory is nearly 45% higher than mid-2023, pushing months of inventory up to 4.84 months, still not extremely high, but rising. HouseCanary.com. On a 5-year horizon, 2025 to 2029, many forecasts suggest moderate growth, e.g., one summary finds average annual home price growth of 3-4% globally or in the U.S. Real Wealth Plus 1. Commercial real estate, CRE, and investment market. CRE is in a cautious revival. According to DLA Piper's 2025 survey, industry sentiment is mixed. While fundamentals are improving, many investors remain cautious given interest rate, inflation, and geopolitical risks. DLA Piper investors are placing more value on functional relevance of assets, e.g., newer office buildings with strong amenities, logistics/industrial assets, living/housing assets, not older, obsolete stock. Global English plus 1 across regions. Some markets show specific dynamics, e.g., the UBS Global Real Estate Bubble Index finds that bubble risks have fallen from high to moderate in many places, reflecting reduced imbalance. Australia. Key of note, some structural shifts. Supply shortages are easing in some housing markets, so less intense upward pressure, but still present in many regions. House Canary data shows inventory rising. HouseCanary.com. Interest rates remain elevated, meaning borrowing costs for buyers and developers are high, which slows activity. DLA Piper survey, 60-66% of respondents cited high interest rates as a top concern. DLA Piper investment themes are shifting: ESG/sustainability, senior living, flexible spaces, data centers/logistics are in focus. Forbes plus 1 key forces at work. Understanding where the market is headed requires understanding the forces shaping it. Here are the major ones.